I'd like to officially welcome you to another edition of our popular InvestNest webinar series. This one is titled ASX Opportunities in the Oil and Gas Sector, Meet the Upstream Players. My name is James Preston. I'm a news anchor and reporter for Kalkine, and I'll be your moderator for today's event. And on behalf of Kalkine Media, I'm very pleased to welcome our esteemed speakers for what promises to be an extremely insightful webinar. Now, the key idea of InvestNest webinar is to present our audience with a panel of experts who share the potential of their business growth strategies along with their company's value and vision. Being able to hear directly from business leaders is, of course, an incredible opportunity, and that's exactly what you will have today. Now, in terms of how this all runs, the business presentation will be for approximately 15 minutes by our individual speakers. We'll then follow that with a 5-minute Q&A session, and then your questions will be answered directly by our business executives. So if you would like to ask a question, pretty simple way to do that. You'll see on your Zoom screen in the bottom right-hand corner, there'll be a little Q&A box. And all you have to do from there is simply click on the box and you can type in your question at any point. It's not going to interrupt the presentation, so don't feel like there's never an inopportune time to do so. It's always a good time to actually get your questions through. If something is popping into your mind, just jump it in there and I'll make sure to get to it once we come to that Q&A session. Anything that we don't get answered, that's also fine. That doesn't mean that your question itself won't be answered at all, just won't be answered live on the time. And to do that, you'll just have to send an email to info@kalkinemedia.com. And from there, we'll then send them on to the respective expert so that we can get your question answered. And just before we start the session, I do want to let you know that this webinar is for informational purposes only. It is not a solicitation or recommendation to buy, sell, or hold the stock of any company that is mentioned today, especially the two that we are engaging with for our expert speakers, and we are neither licensed nor qualified to provide investment advice through this platform. I'm just having a quick little look at the amount of guests that we've got here. That's looking pretty healthy. Might just give it another 30 seconds or so. Looking at good numbers actually for today, which I'm quite pleased about. And look, if you have just joined us, this is of course the ASX Opportunities in the Oil and Gas Sector webinar, Meet the Upstream Players, and we do have two key experts with us. I think we are now ready to go, just getting the final all clear from our team. Yes, all right. We are ready to get stuck in. Well, ladies and gentlemen, thank you so much for joining us today. That's all of our housekeeping out of the way. Let's now get stuck into it. Our ASX Opportunities in the Oil and Gas Sector webinar, Meet the Upstream Players. Now, the world's hunger for energy seems to be insatiable at present. Energy-related commodity prices have recently been pushed to new highs, and the demand is absolutely extraordinary. The biggest benefactors of the recent rally are the upstream oil and gas players who have been involved in the exploration, development, and operation of various projects. And in today's exclusive InvestNest webinar, ASX Opportunities in the Oil and Gas Sector, Meet the Upstream Players, we'll go through the energy sector with a fine-tooth comb. To do that, we're joined by two expert panelists from highly reputable companies. That includes the Managing Director of Invictus Energy Limited, Scott Macmillan, and the Managing Director and Executive Chairman of Bph Energy Limited, David Breeze. Absolutely fantastic to have both of you here today. Let's start with a brief introduction of our first guest speaker, which is Mr. Scott Macmillan. Now, Scott is the Managing Director of Invictus Energy Limited with a background as a reservoir engineer. He's a member of the Society of Petroleum Engineers with more than 15 years of experience in exploration, field development planning, reserves and resources assessment, reservoir simulation, commercial valuations, and business development. And Invictus Energy is an independent upstream oil and gas company focused on sub-Saharan Africa. Its asset portfolio consists of a highly prospective license, Special Grant 4571 in the Cabora Bassa Basin in Zimbabwe, one of the largest underexplored interior rift basins in all of Africa. And to talk us through the finer points of Invictus's projects, it's now my great pleasure to welcome Scott. Thank you for being here today. Scott, the virtual floor is yours.
Good morning, James. Thanks for that introduction, and thank you to Kalkine Media for having me. Great. Well, thank you for having me. As James mentioned, I'm the Managing Director of Invictus Energy Limited. Our ticker is IVZ on the ASX, and on the OTCQB market, it is IVCTF. I'm going to talk through our Cabora Bassa project, which is located in the north of Zimbabwe. And we've had this Firstly, a little bit on the disclaimer. As James mentioned, this is obviously not a solicitation, and you should seek your own financial advice before making investment decisions. So the Kobora Basin Basin is located in the north of Zimbabwe. It is one of the last undrilled interior rift basins in Africa. Our Mizravani prospect is the largest undrilled conventional oil prospect in onshore Africa and one of the largest globally. It's been independently estimated at 8.2 TCF and 247 million barrels of conventional gas condensate. Those are two separate independent estimates by Netherlands Sewell & Associates and GTEC. That's in one single target. Most recently, we've completed our infill seismic survey, and it's showing some encouraging early results, which I'll run through in a second. And finally, last week, we secured a rig for a basin opening drilling campaign in the first half of 2022. That's May 2022 for up to 2 wells. So we're coming up to a very exciting period in the company, which will culminate in the drilling of this absolutely enormous Mizravani prospect. So just running through the securing of the rig for the drilling campaign. So we signed an MOU with Exalo for their rig number 202. That's currently drilling in Tanzania. That will begin mobilization to Zimbabwe in early Q2 once their program is finished up in Tanzania. The benefit of this is, one, Exalo is a very, very highly regarded onshore drilling company. They've operated 35 rigs worldwide. And secondly, we're inheriting a warm rig. That means that the crew is active, the rig is active, and it will be a modest mobilization from Tanzania to our location. The drilling services and long leads are being finalized, and we're also and we've signed a 1-well firm for the Mizravani well and 1 contingent well. So we're aiming to mature some additional prospectivity from the recent seismic campaign to then enable us drilling a back-to-back 2-well campaign. Last week, we also signed a non-binding farm and option agreement with Bph Energy Africa. They have got a serious pedigree, not only in the oil and gas sector, but in the resources sector in general, including in Zimbabwe, having made the Bph Group has pioneered discoveries such as the Buchan oil field in the UK North Sea, as well as making discoveries in Africa, China, and Australia. And Bph have also been involved in Zimbabwe before, where our project is located, and they discovered the largest gold mine in Zimbabwe in Frida Rebecca, which is still producing to this day. So they have experience not only in the hydrocarbon sector and have made company-changing discoveries, but also importantly, understand the jurisdiction in Zimbabwe where we operate. However, as with the non-binding nature, it obviously doesn't preclude us from accepting superior offers, and we're running an active process for our basin opening campaign next year. Looking at a summary of Invictus, we have been around since 2018, since we acquired the project. We're based in Perth, but also have offices in Harare. Our market cap at 12 cents is around 70 million, and as of the end of the last quarter, we had 7.3 million in cash. We are on the proverbial elephant hunt in our project license area. For those of you not familiar with elephants in oil and gas speak, it is chasing anything that's over 1 billion barrels of oil equivalent. So the Mizravani target at 8.2 TCF and 247 million barrels of condensate is approximately 1.6 billion barrels of oil equivalent in one single stack target. So we have spent the last 3 years getting to this point in de-risking the asset from a technical perspective and also from an above ground perspective in Zimbabwe. It has become a new jurisdiction to explore since Mobil left in the 80s, and I'll run through their previous program in a second. Very good infrastructure in the country, which will allow us to not only tap multiple markets, but also there's a lot of infrastructure surrounding us, which will enable the rapid monetization of any discovery that we make. We've already got multiple offtake agreements in place for up to 1.2 trillion cubic feet of gas over 20 years with some blue chip customers. And finally, we've got a highly experienced board and management team, not only from an oil and gas perspective, but also with strong local Zimbabwean experience. Looking at the company from a corporate point of view, we've had a relatively good run from where we started to at the beginning of this year, and we've managed to complete a capital raise in March, which funded our infill seismic program, which is demonstrating very, very promising results. Our board and insider shareholders are very, very well aligned. We have all of our board within the top 10, and obviously highly aligned with shareholders and looking to maximize the shareholder value. We look after our register very closely and make sure that the capital structure has been kept intact over the last period. Looking at our board, our chairman, Dr. Stuart Legg, is a world-class oil finder. He's led exploration teams in Shell, also in Hess and Apache, making 7 discoveries on the trot in Ghana, as well as a prolific track record of over 270 discoveries worldwide. He joined the team about 2.5 years ago and has been instrumental in progressing the technical and also some of our partnering conversations that we've had over the last period. Joe Matizwa, who we brought in as deputy chairman earlier this year, comes from one of our major institutional investors that invested from Zimbabwe last year, which was a great endorsement for the company. Joe is a very, very highly regarded businessman in Zimbabwe. He led the largest listed company in Zimbabwe, Delta Corporation. He currently sits on the Presidential Advisory Council and is a former member of the Reserve Bank of Zimbabwe board. So very, very well connected and highly regarded in Zimbabwe. You've heard about my background. I'm a reservoir engineer. I've been involved in Woodside, which is the largest independent oil and gas company in Australia. And then most recently at AWE, working on the White Sea gas field in the Perth Basin, which is the largest onshore gas discovery in Australia for 40 years. Gab Chiappini, our non-exec director and co-sec, very experienced in the capital markets and has been involved in a variety of resources companies. And Brent Barber, our country manager, is based in Harare and was Mobil's previous exploration manager and managed their previous exploration campaign in Zimbabwe and is very familiar with the asset. Just drilling down into some more detail on where we're located. So our project is up in the north of Zimbabwe in the Kabora Basin Basin. This was previously explored by Mobil in the 1990s. They acquired a huge legacy data set that would have cost around $30 million in today's money, including gravity, aeromagnetic, geochem, and seismic across the northern part of the country. We picked this asset up in 2018. Mobil did identify the big Mizravani structure, but thought that it was more gas prone than oil prone. And in the early 1990s, there was no means of monetizing gas in the region. And the big onshore Panda and Temane gas fields over here in Mozambique, which were discovered in the late 50s, early 60s, still hadn't been monetized. And so they saw very little point in trying to discover even more gas. So we have 80% ownership. Our license, we're in the second term currently, it runs to June 2024. We've completed our environmental impact assessment for seismic and drilling. The seismic infill program we completed in November 21, having acquired 840 kilometers of data. And at the moment, our independent prospective resource estimate for the current license area and from the previous vintage of Mobil seismic is around 9.25 TCF and nearly 300 million barrels of condensate. So a very material portfolio so far. But the reason that it has been left alone was not really for the technical reasons. As I mentioned, Mobil were very optimistic about finding gas, but there was a lack of ability to monetize it. Zimbabwe has been surrounded by activity in the recent period, but it's because of the above ground issues over the last 20 years that's prevented further exploration activity. That's not changed with the change of government in late 2017 and us entering into the license in early 2018 and securing first mover advantage. Probably the most interesting comparisons for us in terms of peers are just a bit further down the rift basin here in Namibia. This Greater Zambezi Rift Trend runs west to east. Recon Africa, a Canadian listed company, are located here. They're at a similar stage of maturity of their work program, currently capped at $1.2 billion. And then Renogen, who are also on the ASX listed here, also targeting these Permo-Triassic Karoo plays, and they've got a natural gas and helium play in South Africa, down here in the main Karoo Basin. Looking at the Mizravani prospect itself, it is the largest undrilled structure in onshore Africa, an absolutely enormous anticline four-way dip closure, and the primary target here in the top upper Angwa, which is the unit that contains source rock, reservoir, and seal, in the lower Triassic, which is the key differentiator and what separates the winners from from the dry holes in terms of exploration of these Karoo age plays, is the presence of lower Triassic source rock, which we have in this upper Angwa unit. And fortunately, the lion's share of the volume in the stacked Mizravani prospect is contained within this unit. So 8.2 TCF and 247 million barrels of condensate can be targeted and will be targeted in May 2022 with a single well. And this estimated dry hole cost for the well will be around $12 million US, excluding MOB and DMOB. So a very material target that can be chased for a very, very small amount of money in oil and gas terms. So this is the top structure map of the Mizravani prospect, and you can see these horizons for each of these units in the Dandy Forest, Pebliarcos, Upper Angwa, which is this bright red horizon. We can thread the needle and target all of these with one single well. Looking at the seismic survey that we successfully completed in November 21, this has been the first seismic survey undertaken in the country for 30 years. It was done very successfully and flawlessly, I should say, through Polaris, who we contracted to come in and run the seismic survey for us. The previous mobile vintage survey are these green lines here, which are spaced roughly 15 to 20 kilometers apart. Mobile acquired these in 1990 using a dynamite source. And this was really a reconnaissance type survey to look at the structural elements of the basin to see if there was anything worth chasing further, that they were always going to go and infill after the survey. This Mizravani structure, which sits roughly over here, was covered by multiple lines, which is pretty rare, but it's just the sheer size of this target. But again, Mobile thought it was gas prone as opposed to oil prone, and so it's sat ever since then. Very successfully completed survey. We generated over 200 local jobs, and it was done LTI free, over 143,000 hours of work completed. I'm going to show you a snapshot on the next slide of this line 10, which runs north to south. And these are, again, the preliminary results that we're getting in now from the processing that has been undertaken of the survey. And what we're starting to see now is highly encouraging. The data density compared to the mobile survey and what we've acquired in our current survey, the mobile survey, which was around 640 line kilometers, was approximately 16 gigabytes worth of data. 840 line kilometers of data is around 4 terabytes worth of data. So around nearly a 200-fold increase in the density of data, which enables us to image the subsurface in far greater detail and give us increased confidence. So what we're seeing here in this this line 10 snapshot is this Mizravani anticline, which is clearly shown here. But what is very encouraging are these anomalous amplitude features that we see in the shallower section of the Mizravani structure. So, and we'll zoom in these on a second. We've got some very strong character through here. And then these obvious amplitude anomalies against the basin margin fault. Zooming in to what we believe is roughly the Dandy level through here, which is the shallowest target in the Mizravani prospect, are these potential flat spots looking through here where, and flat spots can be an indication of a hydrocarbon contact. We also see some loss of character. So we see these sealing up against these faults that run through the structure. And then just up along these faults, we see a loss of character, which may be gas chimneys. And so some very, very encouraging signs that we see within the Mizravani prospect in the shallower sections. The processing work is continuing, and we will get a better handle on the deeper data once that and these deeper horizons once that processing is completed. Looking at what we've achieved over the last 3 years, we have reduced and de-risked the project from a technical perspective, completing the reprocessing of Mobil's legacy data and now acquiring our own seismic data most recently, which is now being processed. We have de-risked it from a commercial perspective, demonstrating that there's a clear market in Zimbabwe, signing 2 gas sale MOUs, one with Sable Chemicals, a fertilizer manufacturer, and the second one with Kalkine Energy, a gas to power developer, and that's for up to 1.2 trillion cubic feet over 20 years. We've also reduced it from an above ground perspective, signing the Petroleum Exploration Development and Production Agreement with the Zimbabwean government, which provides us a clear pathway for development in the event of exploration success. Looking at what's coming up over the next 6 months, we've got the seismic processing and interpretation to complete. We're also running the farm out and partnering process, and we will, once the seismic processing and interpretation is completed, we'll then update the prospect and lead inventory, and that will lead into the drilling campaign commencing in May 2022. Looking at Zimbabwe, again, it hasn't been a traditional E&P jurisdiction because of the above ground issues, but with the reforms that the Zimbabwean government has brought in, it has clearly now opened the doors for business. We've been treated very well and have been welcomed and supported by government very heavily. And some of the clear reforms that they put in place to facilitate foreign investment have been the amendment of the Indigenization Empowerment Act, which previously mandated a 51% either government or local owned company, whereas now that is 100% foreign ownership. And then one of the other important reforms that have been brought in are the special economic zone legislations, and that provides a range of fiscal and non-fiscal incentives, such as 5-year tax holiday, legal and fiscal stability, and a 15% corporate tax rate thereafter, and zero capital gains tax, offshore banking. So clearly you're treated as an independent entity within the country. And then finally, from an oil and gas specific point of view, signing the Petroleum Exploration Development and Production Framework, which provides for the clear pathway to development. Again, it's all well and good from a technical perspective if we make a discovery, but clearly there's no or little value to it unless you can monetize it. Unfortunately, we are located in the heart of an energy-starved region, and we have the access and the markets to be able to monetize any discovery very rapidly. So I mentioned the Sable Chemicals and Kalkine Energy gas sale MOUs. Where Zimbabwe is located in the heart of the Southern Africa power pool, that enables us to export electricity from Cape Town all the way through to the Congo. And this cross-border electricity trading happens already in Harare, just down the road from our office. So looking ahead to what the energy deficit is in the region, South Africa's gas demand is estimated to have the shortfall, I beg your pardon, is estimated to be around 1 billion cubic feet per day by 2030. That's equivalent to the entire east coast of Australia gas consumption. We've got coal-fired power now retiring over the next 5 to 10 years, which is equivalent to around 20% of South Africa's generation capacity. So again, a very, very critical period coming up. The power situation is already quite dire, and that's set to unfortunately deteriorate with the retirement of all this coal-fired power. So gas to power is going to become an increasingly important part of the energy mix in the region. But again, power generation is not the only market that we see. Petrochemicals, which is a huge industry in South Africa, which is majority run on coal to liquids. Again, that is now having to be cleaned up, and gas feedstock is increasingly replacing coal feedstock within the petrochemicals industry. The fertilizer side of things, we've got that gas sale MOU with Sable Chemicals, and Zimbabwe and Zambia are very large agricultural-based economies, and 90% of fertilizer is imported, and Sable Chemicals is currently importing gas from South Africa by rail up to their facility. So clearly, some good synergies between us to supply them with large-scale amounts of gas for their ammonium nitrate fertilizer manufacture. One of the more elegant solutions that's emerged over the last few years is small-scale LNG, and that's really aimed at some of the industrial and mining customers who may be a little bit further away from the pipeline infrastructure, but nonetheless have quite substantial energy demands. A lot of them are off the grid and burn diesel to run their operations. Small-scale LNG can be trucked and replace diesel in their operations at around 40% of the cost and 40% of the emissions as well. So, a double whammy in terms of cost reduction and emissions reduction for a lot of these mining houses. And finally, a very large liquid fuel market in the region of around 800,000 barrels a day. Looking at now the infrastructure and routes to get it to market, very, very good infrastructure in the region. We've got gas pipelines, we've got the Southern Africa Power Pool that I mentioned, and we are located 100 kilometers away from 3 major interconnectors, which allows us access to this entire network in red to export power anywhere in the region. We've got fantastic roads that are used for all the bulk commodities, exporting things such as copper and cobalt out of the DRC and Zambia, as well as importing all of the inputs for Zimbabwe, Zambia, Botswana, and Malawi. We've got rail, and we've got liquids pipelines as well. And the liquids pipeline from Harare through to Beira provides us with an easy route to twin a gas pipeline to then connect up to this existing ROMPCO pipeline, which feeds all of South Africa's current gas supply. And the feedstock from Pandantamane comes off plateau in 2023, and sadly, no further feedstock in sight for that asset. And so they're facing acute supply shortages of gas in South Africa, and hence the 1 BCF per day shortfall coming up by 2030. Looking now at where we are and a little peer comparison between us and a similar sort of project going on in Namibia, further down the Rift Basin with Recon Africa. This is a pre-drill comparison. Recon have subsequently drilled some stratigraphic wells and proven a working petroleum system. We also have a working petroleum system and have all the ingredients present for a conventional hydrocarbon system. Recon drilled their wells before they acquired Seismic. They haven't identified any conventional targets as of yet, whereas we have one of the largest conventional targets going around globally in Mizravani in 8.2 TCF and 247 million barrels of condensate. We've got a richer data set in terms of the seismic density, as well as multiple prospective horizons and conventional traps we've identified. So we feel that we're a little bit further ahead in terms of maturity of our asset, where Recon got to in their pre-drill run-up phase, which is where the majority of that excitement is generated because of the huge drilling catalysts and the potential rewards if the drilling program is successful. Ended up reaching over a $500 million market cap. And we're at a similar stage where Recon confirmed their drilling campaign and Seismic, and then once that pre-drill phase sets in, and you get closer to that result, the risk-reward balance changes significantly. And so we've got quite a few additional catalysts in between the drilling event and where we are currently, and so we should see some very good performance coming up from a corporate perspective. So just to summarize the opportunity, we have secured first mover advantage in Special Grant 4571 through our in-country expertise and strategic advantage. We've demonstrated that we've got a deep market and already multiple offtake MOUs with blue chip customers to monetize any discoveries rapidly. We are strategically positioned to supply energy into not only Zimbabwe, but in the wider region as well. From an onshore point of view, being a low cost asset, we can do it significantly cheaper and significantly quicker because of our proximity to the market. and the sheer scale of our asset. We've got a very supportive government backing us and willing success, a very experienced board and management team, not only from an oil and gas perspective, but also a local Zimbabwean perspective. Our seismic campaign has successfully completed now and showing some very encouraging early results, and we're very excited to see the fully processed data and show people what we believe the portfolio is going to look like once that has been completed and we're finished interpreting it. And finally, we've got some significant near-term high-impact catalysts coming up, which will culminate in the drilling of one of the largest conventional global targets worldwide in 2022, targeting 1.6 billion barrels of oil equivalent. So that's my presentation for today, and happy to take any questions.
Scott, thank you so much for that really insightful presentation, very much in depth too. It's just incredible. I mean, that the basin area, 250,000 acres, is just a massive section of land. How long do you think you'll be able to get the most out of that project? Does it have an end date for you?
Well, look, it's got an end date. I think will ultimately be determined from the drilling results. We're going into some frontier drilling. But what is exciting is if it's successful, then, as you mentioned, because it's a large position, it's the running room after that and what else it unlocks. So we'll be able to see that once the seismic, this new seismic data that we've acquired, that's been infilled to from 15 to 20 kilometers that Mobil acquired it at to around 1.7 kilometer spacing. To give you an example, the Waitsia gas field that was discovered by AWE, which is the largest onshore gas discovery in Australia for 40 years, that's around 50 square kilometers in area. The previous Mobil seismic lines are around the spacing of 15 to 20 Ks is roughly 150 to 200 square kilometers. So you can hide pretty substantial prospects in between those existing lines. So that was one of the other reasons that we went, and not only to high grade the Mizravani prospect and locate the optimal drilling location to test all of those 5 horizons and make sure we hit them in the right place, but also now to identify additional prospectivity, which will really provide materiality or further materiality and a lot of depth to our current portfolio.
Absolutely. Now, we've got quite a few questions that have come through from our audience as well, so we'll roll through a few of these now. Let's start with Nick Williams, who says, Invictus already has a world-class prospective resource base, and the potential of its acreage is truly staggering. Do you have plans to further quantify the potential of your license area?
Yes, so we do, and that will come once we finish the interpretation of the current seismic. So that's ongoing, as I mentioned, and we'll be able to unveil the full potential of our acreage once that has been completed.
Absolutely. Linda says, why does the Cabora Bassa project have national significance for Zimbabwe?
Well, it has significance not only for Zimbabwe, but for the wider region in terms of being able to become a significant source of energy in the region and for us to become a regional energy supplier. So for Zimbabwe, the current energy deficit in the country is around 1,000 megawatts of power. This project solves that, if it's successful in one foul swoop. So from a country that is suffering from energy deficits, which handicaps industry and economic growth, this is obviously a silver bullet. So not only is it solving the power issues, but also will provide a significant contribution to the fiscus in the country as well. And then also in the wider regional context, that will also trickle through from an energy perspective and providing low-cost, reliable and affordable energy in the region, and also reducing the emissions profile, because the predominant generation mix in South Africa is 90% coal, and in Zimbabwe it's about 50-50 coal and hydro. So clearly any coal substitution with natural gas means a lower emissions profile as well as stable and affordable and reliable energy. So it is a hugely significant project for Zimbabwe and the wider region.
Scott, you also made mention there of the energy deficit currently being faced by Africa. An anonymous attendee has said the energy demands are absolutely huge. Do you believe you can keep up with the demand? Is there a plan to perhaps team up with other companies to help meeting the need for Africa?
Yeah, look, I think because the energy deficit, and if we look at the coal-fired power retirement in South Africa, that's going to be about 10,000 megawatts. South Africa consumes around about the same amount of electricity as the entire as Australia as a nation. So if you take 20% out of the grid, that really does hamper economic growth, and it's caused already even 2,000 to 3,000 megawatt deficits at the moment are causing significant economic hardship. So if we discover 4 TCF or 8 TCF or whatever the number ends up being, it will make a difference, but unfortunately it's not going to solve all of it. There's such a huge energy deficit in the region that it's going to take multiple projects of our sort of size to solve. So I think what you'll end up seeing is a combination of, if we're successful, our project being a low-cost regional supplier, but that will also have to be supplemented by LNG imports. Would probably be my view of how I think the energy situation is going to unfold in the rest of the region. So yes, we will have to team up with other companies, whether it's for other projects or they start bringing in LNG imports. Time will tell.
Absolutely. Now, Nick says, do you anticipate in receiving farm-in offers from North America? Are you also considering going alone?
Yeah, so we've articulated previously that we are running a 2-track process. One to go it alone because it is onshore. It is relatively low cost in terms of chasing it. And to give you an example, Brulpadda offshore South Africa, which was successfully discovered by Total and its partners in late 2019, that's around 5 to 6 TCF. And that the first attempt cost them 150 million to drill. They couldn't do it because of the Met Ocean conditions, and they came back in 2018 and re-drilled it at a cost of $200 million. We can target the same size prospect onshore for $15 million. So clearly the risk versus reward and the cost of chasing something really material that is needle moving for major companies and economies isn't a huge ask for a company our size. So we've stated we will maintain that ability for us to self-fund, and I think but also we've left the door open for partnering with strategic partners, and that takes a little bit of the risk away for us. And because we've got 80% of the license, we'll still be able to maintain a material amount of equity and exposure to this project. So yes, we have these 2-track options, and we're evaluating, or we've got a process going on with companies that are located not only in North America but also elsewhere in the globe as well.
Absolutely. Now, from a very inquisitive speaker, or should I say guest joining us today, who simply goes by the name of Tell Me, he said, if gas or oil is found after drilling in May, can this easily be materialized for usage, or will there be a huge capex investment to get this gas and oil to customers? What's normal estimated costs that will be made to get this in production when drilling is successful? Thanks.
Sure. Again, one of the benefits of where we are located, and I probably forgot to mention the infrastructure side of things. We've got a tarred road that goes all the way into the basin. So from a mobilization point of view of getting equipment in, but also getting product out, it's far more civilized than a lot of the interior parts of Africa. But being onshore, much lower cost in terms of capex. And also you have the advantage of being able to phase your project to meet the growing demand. One of the issues with operating offshore is your footprint that you have for your platform or your facility. You've got to design it and you've got to get all your gas contracts lined up at once to design your footprint for your facility, because you've only really got one chance to build it. Retrofitting stuff offshore is hugely expensive, and so typically the lead times for those developments are longer. Whereas onshore, you can phase it, so you can start off with a smaller stage project, and we've got examples of that in Australia, not only in the Perth Basin, but also on the East Coast. So from a monetization point of view, I think what's very important is typically when, especially with gas, you discover it and then you've got to go and look for customers. We've already got gas sale MOUs in place with existing customers in Zimbabwe who are importing gas from South Africa. So that market is there ready for us and we'll take gas as soon as we can get it to them. So we really have a luxury in that respect of having a ready-made gas market that we can cater to that and fast track that and get it done very quickly, and then build out the rest of the facility and the infrastructure to get it to the wider region, particularly in the South African market, which has a huge shortfall of gas coming up. So from a timing perspective, location perspective, we're really well placed. But again, if we're successful in our drilling program in May, we can do a pilot scheme where we can strip condensate. If it's a gas condensate discovery, we can strip the liquid condensate out and truck that straight to Beira. You've got modular gas to power generation units that you can put in there, so we can get this up and running and generate revenue, which will help offset some of the other debt requirements for later CapEx funding really, really quickly. So again, one of the reasons why we really like this asset.
Yeah, look, you've certainly seen across it for any eventuality, which is obviously very reassuring to hear for any of your shareholders who might be attending for today. We'll just go 2 more questions. John has a couple. We'll just get one from John for now, though. And just a little reminder, if you do have a question that doesn't get answered, then just head across the email. I'll give you that in just a moment. But John's question that we'll focus on here is, would a TSX listing have been a better option for IVZ over the recent OTC listing in hindsight?
Look, it's difficult to say. The TSX up until recently has been, we evaluated a number of sort of secondary listing alternatives. The TSX, yes, that was an option. Again, that comes with additional regulatory and compliance requirements. The OTC is a relatively quick and straightforward listing process, and doesn't add a material amount of complexity from a reporting and compliance point of view. And also, I think we've watched the liquidity that's been generated on some of the oil and gas stocks listed on the OTC. I mean, Bph Energy was a prime example earlier this year, where they were turning over an enormous amount of volume on a daily basis during their drilling campaign. And so, and Recon Africa, a similar sort of story through their OTC listing, having a comparable asset in nearby. So that's the reason that we ultimately went to the OTC, was weighing up a number of factors. We looked at the London market as well, and felt that the performance, if we weren't going there to raise money, then there was, we didn't want to just do a compliance listing. We provide our shareholders here with that opportunity. So yeah, that was the reason that we picked the OTC.
Absolutely. Now, I think we might be able to squeeze in an extra one, but I've got a rather large one that's coming here from James Privet. Sure. Who says, I have a question for Scott, please. A lot of investors are reluctant to invest in fossil fuel exploration. Can the benefit of a large gas find onshore in Zimbabwe be quantified by comparing to the alternative of building more coal-fired power stations in Zimbabwe and the ability to retire coal-fired power stations in South Africa, and therefore show how much CO2 and greenhouse gas emissions can be in fact reduced by such a gas discovery? I think most Western investors have missed this point, and it is not well understood. This may help to attract new investors or funding, perhaps even from ESG funds. What's your perspective on that, Scott?
Sure. Very good question. And I think what has been demonstrated, probably actually last week is the best example, is there's a new gas to power development that is being just been sanctioned in onshore Mozambique from the Tomato field. So that was closed last week. And again, that is, even post COP26, still being supported. And that's a 450 megawatt facility. And so makes a difference. It's not going to solve the region's power problems, but it is still being supported by financiers. And I think the Western financiers haven't stepped away. I think the pool is probably smaller, but what we are seeing now is some of the institutions like the Africa Development Bank stepping in, the Africa Finance Corporation stepping in to fund these sorts of developments, because they understand that to industrialize economies in the region, you need reliable and affordable energy. And gas certainly has the emissions profile, it's got the scale, and it's got importantly, the deployment timing as well. You can build gas to power facilities very, very quickly. Nowadays, coal-fired power takes anywhere between 4 to 6 years. Gas-fired power you can do within 1 to 2 years at quite some scale. So I think the energy mix in the region, anything that you're replacing the retiring coal-fired power with, if it's gas, obviously that is lowering the emissions profile. And people are starting to realize that because particularly a country like South Africa has a large industrial electricity demand, if renewables cannot fill that deficit that's coming up at that sort of scale of 10,000 megawatts. They're burning diesel at the moment when you have one of the coal-fired power stations goes down for maintenance or faults. And so clearly that's a poor outcome purely from an emissions point of view, but also from a power cost point of view. Diesel is hugely expensive to burn, whereas gas, particularly if you've got a large gas supply like what we're chasing, really does solve that problem. So we've had preliminary conversations, and through to Tanga Energy, who we've got this gas sale MOU with for a gas to power development. They've done this before in West Africa, and so they have relationships with all those sort of financiers, and they understand that energy situation in the region and what the emissions profile looks like from a gas to power perspective versus the alternatives.
Let's go. We've just been inundated with questions. I think this is the most I've ever seen from one of our guest speakers. So only answer this one if you think you can give me a nice, sharp, short response, because we do have to move on. Otherwise, I'm sure that we get this via an email. But John's been quite persistent with it, so he really does want it answered if you can. Why has Recon's SP exploded and IVZ hasn't? If it's a short one, 3. Otherwise, we can go into the email.
Sure. Look, I think there's Recon has been a fantastic story for its shareholders. It listed roughly at a similar time that we did, and that's gone from a sort of $20 million market cap now to a $1.2 billion market cap. I think from a promotion point of view, they've done a very good job, and probably a little bit sharper than what I'm a conservative reservoir engineer, and we have only put out our conventional prospective resource numbers. Recon have been touting the entire basin potential, and really using the generation numbers of what's been generated in the basin as opposed to what is recoverable. So from a generation perspective of what the source rock has released, we've actually got pretty similar numbers from what's been generated in the Cabora Bassa Basin versus the Kavango. We have just, and again, it's a reporting thing on the ASX of prospective resources versus generation numbers. We're not allowed to report those, only the recoverable numbers. So typically your recoverable numbers are roughly a handful of percent of the generation numbers. So Recon are still to map out any conventional targets, and prospects. So as I said, we believe we're a bit more mature in that respect of where we are. But I think what's important and what's been demonstrated coming up is that pre-drill period, where once that sets in, and we've put the sort of marker down now with the rig and drilling in May 2022, that will start to reflect better value of when we get closer to that, ultimately, which is going to be the major catalyst for us.
Brilliant. Well, Scott, thank you so much for going through so many questions there. I think you might need a lemonade after that. And just
That's all right. My pleasure. Yeah. It's great to have interested investors and shareholders, and appreciate the opportunity to present on the webinar.
Absolutely. Thank you so much, mate. We'll also get your final thoughts in a little bit of time, but we do now have to move across to David. But thanks once again for the presentation and answering all those questions for us.
My pleasure.
Well, let's move on now, ladies and gentlemen. It's fantastic to hear from Scott, and I know there are still some questions in there. So if you didn't quite have your questions answered, simple as sending across an email to info@kalkinemedia.com. We'll make sure to get any and all questions that we didn't get to, whether it be from Scott or from David, should I say, answered in pretty due course. It won't take too long to turn those questions around whatsoever. But we do now need to move on. It's my great pleasure now to move to our second guest speaker for the day, and that is the Managing Director and Executive Chairman of Bph Energy Limited, Mr. David Breeze. David is a corporate finance specialist with extensive experience in the stockbroking industry and capital markets. He's worked on the structuring, capital raising, and public listing of over 80 companies. And these capital raisings have covered a diverse range of areas, including biotechnology, oil and gas, gold, and manufacturing. And in other words, he's a man with a lot of experience, a diversified skill set, and a history of success. As for the company itself, Bph Energy Limited is an Australian headquartered diversified company that holds significant investments in different sectors, including biotech and also resources. The company holds investments in the biotechnology sector through Cortical Dynamics Limited and Molecular Discovery Systems, and the oil and gas sector through Advent Energy. Bph holds a significant stake in oil and gas exploration and development firm Advent, which holds offshore and onshore exploration and near-term development assets around Australia. And to talk us through the finer points, David, I now invite you to share your presentation. Thank you so much for your patience, and thank you so much for being here with us today.
Thank you, and thank you for the opportunity to speak today. I'll just pull up the screen, and are we showing there now?
Yep, just make that full screen for us.
Very good. Right.
Perfect. Thank you, David. Take it away.
Very good. So first slide for today, Bph has a 36% interest in Advent Energy. Advent Energy, in turn, has an 85% interest in the PEP 11 project. And what you're seeing here is part of the presentation, and this is here to give you an understanding of the fact that gas is such a critical component in the total manufacturing sector within Australia on a global basis. And we really only start to see it with what's happening over the last several days. And so we've just had an emergency task force established to fix a diesel supply crisis. But when I say diesel supply crisis, it's the supply crisis of AdBlue. AdBlue is derived as an additive to stop nitrous oxide in coming out of diesel engines, and it's formed or it's produced by urea as its core component, and urea in turn has gas as a principal component of its manufacturing. And what's occurred is that China has now stopped or severely limited the export of AdBlue, and we're now seeing that impacting right across every sector in Australia. So road transport, food, and right the way through transport of all different types. So you can't just on a global basis shut down gas and think that it isn't going to have repercussions in terms of what it's doing to the rest of the manufacturing sector and in turn the population. So we look to other people that are making commentary on gas and the critical importance is of the PEP11 project, offshore New South Wales, offshore Newcastle in particular. So as we see, as energy prices rise, the heat is on for New South Wales to find its own sources of gas. And that's the key to the PEP11 project. So what we're seeing is there's a shortfall imminent, and the East Coast gas market gets a finely balanced supply outlook for 2022, and right through to 2025 and beyond, there are issues in terms of gas coming into that network. And remember here that New South Wales does not produce anything significant at all in terms of its domestic supply. And what's also happening at the same time is other sources, including down in the Victorian offshore fields, where 6 TCF has been produced over the last 60 years, but it's now facing a 43% reduction in supply. And I'll move to that and explain further in just a moment. The PEP11 project is not just a potential gas supply. The PEP11 project is also has a potential for the carbon capture and storage for the storage component. And it is the only area that is proximal to Newcastle to Sydney, where 33% of all of Australia's carbon dioxide emissions comes from industrial sources, including coal-fired power stations. So meeting Australia's net zero emissions targets by being able to capture first and then store underground the carbon dioxide becomes a critical component to meeting Australia's net zero emissions. And we are the closest potential carbon storage area to the major Australian carbon sources. In other words, it's just like buying a house: location, location, location. 300,000 jobs in New South Wales rely on gas supply, and the gas supply are also important for the household sector and household requirements. And that's a key component to understanding the importance of our project. And you see that there in looking at the relative positioning of the Cooper gas Cooper gas projects and their supply, and the Bowen Basin gas supplies up in Queensland. Most of that gas in Queensland now goes into the LNG network for export overseas. And what we're really seeing here is, as I said, a 43% reduction in the years between 2021 through to 2025 out of the offshore Victorian areas. And that really means that our project offshore Sydney becomes a key component in the solution for gas supply. And you see it rather more in this presentation when you look at the New South Wales Narrabri project, but the dotted line is the demand curve out to 2030. And you see the supply decline out of Victoria and even the Cooper Basin, and Narrabri by itself does not meet that shortfall and the expected continued demand. And what's really happening then is we're seeing the impact of gas prices. In other words, there's a growing influence of LNG pricing on domestic gas prices as those southern supplies decline. So the LNG netback pricing is an emerging influence. And now you're seeing long-term domestic gas prices expected of $8 to $11 a gigajoule. And that really shows the importance of the PEP11 project. So the recognition of the need for a gas supply, an alternate gas supply, and an alternate carbon storage area was shown in the 2020 when the New South Wales and the Australian government signed an MOU whereby the Australian government funded $2 billion to increase the energy supply and reduce the emissions in New South Wales. And the objective within that was to bring to the market an extra 70 petajoules a year of additional gas supply. And that's not happening at the moment. And what's really happening, and you see that in those supply and demand curves that I just showed you, is that when there's a peak demand for gas for electricity generation in Australia during the summer period, it coincides with the winter demand in the Northern Hemisphere, and that leads to spikes in gas prices. And we've just seen that with the shortage and the really significant increases in LNG prices in exports or imports into China, Korea, Europe, and the issues with the gas supply when renewables fail to meet the network requirements in Europe and across Asia. So what we're now seeing when we come back to the Australian market is as renewables replace coal-fired power, then in fact, when the renewables aren't on production, then we're seeing an increase of the Australian, in the intervention in the market of the Energy Market Regulator, which is AEMO, and they intervened into this market 250 times in 2019-20 compared to just 20 times 3 years earlier. Now I'll just talk to the PEP11 project. So we've got 4,600 kilometres. The Baleen prospect is the area that is really the target here. It's 26 kilometres roughly from south-southeast of Newcastle and 26 kilometres offshore. It's not 5 kilometres from the coastline, and really that structural high that you see, which is around 2,000 metres under the sea floor, and the red shading there shows where the structural high is and where that target is. And so that's where the drilling is to occur offshore Newcastle. And the importance of that is it is only 26 kilometres from the Munmora gas-fired power station, and in turn that pipeline network that runs from Sydney through to Newcastle, which supplies gas currently from the southern states and from the Cooper Basin and up into Newcastle. And so we are ideally placed for our proximity to come into that gas pipeline at Munmora, and in turn up into the Kurri Kurri plant, which is just close to Newcastle. We are also ideally positioned because that same pipeline network gives the capacity for the carbon dioxide to be piped down right next door to that pipeline and through the same pipeline easements, and therefore to be taken offshore into the project, provided, of course, that we, through the drilling that is planned, are able to show that we can store that amount or the prospective amounts of carbon dioxide in those subsea gas reservoirs or carbon dioxide reservoir storage areas. To give you an idea about the potential there, if you think, and I'm sure almost all of you will have been to Sydney, and you drive around the expressway and across from Sydney up into the and across the Harbour Bridge, and you drive through and you go through a really thick section of sandstone, and that of course is the type of reservoir that we're looking to target, that a very thick reservoir, a sandstone reservoir section offshore Sydney. And we're looking at prospective resources of 5.7 TCF. And I spoke earlier about the 6 TCF that's been produced out of Victoria over the last 60 years. And that gives you an idea of the prospective gas supply that might come out of this project area. So we have the gas-fired power stations being started up in New South Wales, and the potential for carbon capture and storage. The offshore basin is a gas-prone basin. It's been recognised as such by going back for 30 years. The area has moved into a gas, what is known in the geological terms as a gas phase or the gas window. And you see that in the in this map, which was produced 30 odd years ago. Santos and Amperex themselves were looking at this area as a means to produce hydrocarbons going back then. But of course, gas, which is what this basin is about, was worthless, or it was worth less than $2 a gigajoule. And now, of course, as you saw from those graphs that I showed you earlier, it's worth around $8 to $10 a gigajoule. So the whole market has changed there. So what we're looking at here, and you've just seen from the prior presenter, the amplitude anomalies that they were mapping, and that's exactly what we're mapping here, offshore Newcastle. And we're looking here at a drill target of 2,000 metres of around 6,000 acres. 6,000 acres is 25 square kilometres. This is a really significant, substantial target, which of itself could provide a solution to this gas shortage. And that really is a key to understanding it. Now I'm going to just take you through some of the indicators of gas that's occurring here. In 2006, the Australian government went and they looked for shelf slump features which occur when gas comes up from deep in the stratigraphy. And of course, remembering that Newcastle is the largest coal export port in the world, but also the coal areas that they produce from are some of the gassiest in the world. And what we saw when the Australian government looked at this area in 2006 was really significant gas escape features that showed up all the way down through from north of Newcastle down to south of Sydney. So much so that you see here this area offshore Sydney, and that's got, that is a seafloor mud volcano, which is caused as gas comes up from 2,000 and 3,000 metres down underneath the, in the stratigraphy. And that's exactly what they found. And in fact, there were pockmarked fields here, and the analogues here are offshore Norway and even offshore in the Northwest Shelf, where you get these gas features coming up as the gas escapes from much deeper in the structure. And that's what causes these shelf slump features in the further in the offshore. So in a side view here, so you've got the gas sourced at a deeper area, then you have deep reservoirs, and then the gas over time seeps through into shallower reservoirs, and then that rises through up into pockmarks on the sea floor. What's the importance of that? When Schumacher looked at wells drilled all around the world, 80% of the wells drilled where you had positive geochemical at the sea surface were successful. And active seeps and migrated hydrocarbons are a key indicator of ongoing hydrocarbon generation. And that's the key to understanding why we've stayed with this basin and with this project for so long and what its importance are. We had the CSIRO look at these amplitude anomalies, and what they saw was simultaneous measures of reflection strength, RMS, instantaneous frequency, all indicators of gas down at that 2,000 metres. Now, we propose, subject to permitting, that we will drill down to 3,000 metres through that gas target and down into 3,000 metres where we're looking for the carbon storage in addition to the gas targets. So that's why our project is both a gas target and a carbon storage area. And CCS is a key technology to maintain the industrial base in New South Wales. The next nearest prospective basin for the storage of gas is in the Darling Basin, which is 1,000 kilometres away from these sources of carbon storage. Now, I've probably spoken for long enough on the project, whilst we also have an investment in cortical dynamics. I'll stop now and allow for the audience, please, to ask their questions. Thank you.
David, thanks so much for that. Big explanation there, massive presentation, and you're doing enormous things as well. So it all quite fits in well. And I'll tell you what, it's not the only large thing that we're discussing here. There's a stack of questions that have come through, so let's get stuck right into them. Let's start with, I think we'll start with Sandra here, who says, we've been hearing about the tendering and contracting updates about the Sea Blue 1 exploration well. When can we expect the drilling to commence?
So that does depend upon the timing of the approval from both NOPTA and NOPSEMA. We're currently going through the environmental plan preparation with Zodis. We appointed them earlier in this year. The planning for the drilling is dependent upon those two key regulatory approvals. NOPSEMA is one of the strongest regulatory environmental regulatory authorities in the world. We welcome that. We're quite happy to go through that process, but it's just, it takes us through to next year, into late next year, and Bounty actually in their annual report, and Bounty of course is a 15% holder in this permit, said that they expected the drilling to occur in the second half of next year.
Fantastic. Now, David, if I can also just get you to stop sharing the screen for a moment so we can get you back up on camera just yourself as opposed to the presentation too. Perfect. Thank you. Move on now to Arif, who says, is environmental planning prerequisite for the NOPTA approval?
No, it's not. NOPTA approval comes first. We have two applications into NOPTA. NOPTA regulate merely suspension, extension, and approvals on permitting. And once that permitting is through, then you move through into the NOPSEMA approval process as well. That's why we're going through all of the environmental planning process, because that takes a 6 to 9 month period as you go through that environmental process. but simultaneously with that, you go through the long lead items procurement, which is what we're doing at the moment. And you see that in the announcements that we're making of long lead items. In other words, we've tendered for rigs, we've tendered for wellheads, we've tendered for drill pipe and other types of ancillaries, and we're going through a whole process about that at the moment.
We'll move on to Nicholas's question. He says, if the Baleen prospect offers such a huge upside energy-wise and CCS-wise, why is it being held up by Keith Pitt, who has remained committed to the gas-led recovery?
That's a question that I'll leave to the Minister. The Minister has a regulatory process, and we respect that process, and we understand what's occurring there. But as you have just heard me say, we're going through a whole process that enables us to meet an ultimate target of drilling in the project when those regulatory approvals occur.
We have a number of shy guests attending today. There's plenty of anonymous questions coming through as well. One of those is, when are we able to see the NOPTA recommendation?
Again, that's a question that I'll just defer to NOPTA and the Minister. It's not possible for me to make a prediction about that process.
Okay, absolutely. Now, in terms of another question here from Chris Peterson. Hi, David. Could you tell me how the PEP11 gas project will contribute economically, ecologically, and socially to the regional and national economy?
So you've heard me outline here. Gas enables a 60% reduction in carbon dioxide emissions as you substitute gas-fired power stations for coal-fired power stations. So in the social sense, the mere production of gas and gas-fired power stations lead to a reduction in carbon emissions. In the area that we're talking about, if you think about what I spoke about in terms of the quantum of reduction that can occur, then in fact, the mere substitution of gas for coal-fired power station then could lead to a significant meeting of Australia's carbon dioxide emissions targets. In addition to that, of course, and I've been speaking about the carbon storage component, when you add a carbon storage potential to the gas-fired power station, then of course you're adding significantly. And I spoke about the community, gas demand into homes and gas demands into industry, and the 300,000 jobs in this, just in New South Wales alone. Then gas becomes a critical component into meeting that employment, and gas also gives the potential for significant employment growth and tax revenue. So you have, if you will, a triple. It goes further than that. There is the potential for hydrogen production out of methane gas, and hydrogen, of course, is what everyone is focused on. And blue hydrogen out of gas becomes the closest to $2 a kilogram hydrogen production cost, which of course is the stretch target that the Australian government is looking for at the moment. And we're certainly keen to do that. I should say, and I didn't speak at the outset, and I'll just talk briefly for the moment, we're in suspension at the moment, and we said in that suspension that we were looking to do a farm in, and our company is looking to make an announcement for a farm in for Advent, and the farm in is not in the PEP11 project, it's for Advent into another project. And so when we have concluded the necessary process to be able to make that announcement, then we will seek a relisting again and the lifting of that suspension.
David, I know you can't talk a great deal about NOPTA-related things here, but I think this is an interesting question, given we do have federal elections coming up next year. The question is, has Bph Energy already thought of a backup plan if Labor is voted into the federal government and continues to commit to rejecting the PEP 11 NOPTA application for extension? You might not be able to answer this in great depth, but is there any thought about potentially a change of governments there and what that might do?
I won't answer it because I don't really wish to involve our company in the political process, except by way of saying this. At the latest Labor Party conference, we certainly noted that the Labor Party committed to gas as a key component of the of manufacturing and production and the carbon reduction component for Australia in the future. And so, in fact, we really meet with the Labor Party's objectives as well as the Liberal Party objectives. And when you look at those facets that I spoke about for the proximity of our gas project offshore New South Wales, 26 kilometres offshore, then in fact, we really become a potential key for both the parties in terms of the future. And when you think about carbon storage, again, the Australian Labor Party is also committed to carbon storage. So when solar and wind don't work, then of course gas becomes a key part of that energy mix going into the future.
Well, that leads very nicely into a question here from Kira, who says, how can the PEP 11 gas project contribute towards achieving Australia's energy security?
Everything that I've just discussed talks about it, gives you an answer to the energy security, both in terms of gas supply or potential gas supply and gas pricing. It is cheaper by far to produce gas from an offshore area than to bring it in from as an LNG tanker. An LNG tanker, if you're bringing it from around the other side of Australia or in fact from overseas, has carbon emissions associated with both its production there and its transport, and we're 26 kilometres. So we're a really significant potential part of that solution.
Now, I think for any other further sort of NOPTA-related government ones, we'll just push those to the side. If we do try and have any further questions of that ilk, they can always email you. You can try and formulate a response to that, because I think we're going to come to a few stumbling blocks if we continue to focus on that. So let's have a look instead at a question here from Sam, who says, hi, David. I'm interested in knowing more about cortical dynamics. When can we expect Cortical to secure US FDA approval for its brain anesthesia response monitor? What about other key markets?
So the Cortical product is, for those that aren't familiar with it, is a brain anesthesia response monitor. Its uniqueness is that it has the capacity to both measure depth of anesthesia, but also the pain input into the cortex. And in that respect, it's a unique product on a global basis. And we're going through a regulatory process. Now, we've already got TGA approval, and that's for the anaesthesia monitoring component. We already have CE, that is the European mark approval, again, based upon the TGA approval. We have approval in Korea, and we're now going through the American FDA approval process. And that is recognised as a lengthy and a very rigorous process. And that's not to say that the processes that we've been through aren't extremely rigorous, but we have been through a process and we've submitted to the FDA, and every producer that goes into that FDA process has an extended time frame, and that might take between 3 to 9 months or more to actually get through that approval process. And it's not appropriate that I make a prediction about timeframes, except to say that we've submitted to the regulator and we're going through a process with that regulator for that approval process. And as with any regulator, they independently will assess and and question the submitter about the project, and that's exactly what is occurring at the moment.
Well, David, we'll just take two final questions here. One of them is from Thomas, who says, your investee company Advent recently appointed Professor Peter Cook and Mr. Andrew Hogan. Should we expect more action from the PEP 11 project as a result going forward?
Yes, we do. And in fact, on our website for BPH, you've seen Professor Cook and the presentations that he's been making to various groups. And of course, Andy Hogan was appointed to manage the contracts. You're seeing that in the type of contracts that's going through at the moment. And we also appointed a further group, Aztec, to manage the other component of the well planning process. And we will, through Aztec, just as we did with Zodis, bring other experts in to help in that well planning and environmental planning process. And that's what's going on at the moment.
Wonderful. And David, we're nearly at the end, mate. One final question here for you. I know some of these have been a bit tricky to get around as well. This one comes from an anonymous attendee who wants to know, will there be a domestic demand for PEP 11 if Narrabri, the Beetaloo and Port Kembla / Newcastle terminals all come online?
So the presentation that I gave showed you in that graphic of the gas supply. Narrabri is estimated to come in with about 70 petajoules a year. And the New South Wales government, in the deal that they did with the federal government, looked for an extra 70 petajoules per year. So in fact, the PEP 11 project becomes a key component. If you look at the gas import terminals, you have to consider price in that, as well as supply. And price in the international LNG marketplace went to $30 a gigajoule. The urea production plant and the production plant for fertiliser at Gibson Island, Queensland, just shut or signified they're going to shut down 12 months from now because they were unable to source long-term supply of reasonably priced gas. And reasonably priced gas is not $30 a gigajoule. So if you're looking to bring in LNG, then, and you're looking to support the power and the energy, low-cost energy, then LNG import terminals may not achieve that objective at all.
David, thank you so much for answering those questions. There was a lot to get through, and I really want to thank you as well for the presentation. Very insightful.
Thank you. And thanks for the opportunity, and thanks to your attendees for listening today.
Absolutely. I'm sure they got a lot out of it from both yourself and Scott. And David, just before I bring Scott back into the fold, I want to get your final thoughts that you'd like to leave with our viewers and your shareholders for today.
So, as you heard, we have both the PEP 11 project, and we do intend to make an announcement in the near future on a further farm-in. So in fact, when you're looking at Advent, you can look at a gas supply, a potential for the use of that gas in hydrogen production, and for the offshore project to also potentially provide a solution in carbon storage. In addition to that, of course, we have the cortical dynamics brain monitor, and the cortical dynamics brain monitor is in the process of integrating its technology with the Philips, and Philips are in 60% of operating theatres with their display screen on a global basis. Going through that regulatory process means that, in fact, it gives us an enhanced capacity for the cortical dynamics technology to go into that global marketplace. And there's over 300 million operations a year, of which a significant portion could use brain monitoring technology.
David, wonderful. Thank you so much for sharing that information with us today.
Thank you.
Now, Scott, I'll get you to come back in now, mate, and let's just get your final thoughts that you'd like to provide to our viewers today, and also your shareholders who might be watching. I hope you've enjoyed the session so far, and we'll just get you to get your camera back on there. If I can also get our team to cooperate. There we go. Excellent. So we're all there. Scott, final thoughts, mate?
Yeah, look, firstly, just thank you to yourself and for Kalkine for having us, and for those tuning in today. Always great to chat to investors and shareholders, and thanks for the questions. I think just to wrap it up, Invictus is approaching what is going to be one of the largest conventional drilling events in 2022, and for a company our size, to have that exposure is pretty monumental. So it's going to be going to be a very active period for us in the lead up to the drilling campaign, but also a number of catalysts in addition to the main game, which is the drilling of that 8.2 TCF and 247 million barrel target. So exciting times ahead for us.
Absolutely. Scott, thank you so much for your time today. Thanks for answering those questions and just putting everything in a nice little package to sum it up for us.
Thanks, James. My pleasure.
There we have it, ladies and gents. I hope you enjoyed that InvestNest webinar. Very insightful indeed. Of course, ASX opportunities in the oil and gas sector, and we certainly did meet the upstream players today. There was obviously a lot of questions that came through. We really put David and Scott under the pump to answer as many as we did, so we do appreciate that. If you didn't get your question answered, not too late either. Simple case of heading across to your email and typing in info@kalkinemedia.com, and then just in the subject line, either deliver it towards David or to Scott. And also, of course, in the body of the email, include your question, and we'll make sure to get that answer for you quite quickly. Of course, if you do want to follow up any further business insights, market information, executive corner expert talks, which of course, Scott and David, we do indeed plan to have them be a part of this moving forward. And to do that, just head across to our YouTube channel. That's Kalkine Media, and you can follow our live broadcasts and also all of our uploads. But that is it for this webinar. Hope you enjoyed this session. And until next time, have a terrific day of trading and have a wonderful Christmas and holiday season. Catch you soon.